We would like to now welcome our chief guest and present him with a small token of our appreciation.
Yes, indeed. In his capacity as the governor of the RBI, Mr. Das has held the key to comprehending India's tremendous growth story. His stewardship has regulated and secured the monetary policy to institute this steadfast, this robust economy that we see thriving now.
Absolutely, a small token of our appreciation. In fact, at the World Economic Forum in Davos just this year, he ascertained that there is a lot of international confidence in India, a lot of strong technology that's been built around India, and such is the high resolve of the Indian economy.
Yes, indeed. Now, to speak to us further about the way ahead, Mr. Shaktikanta Das, may we request you to please address us.
Mr. Subramanian, members of the entire team ET Now, distinguished panelists and other experts who would be taking part in various discussions during the course of rest of the day, members of the audience, ladies and gentlemen. I'm extremely delighted to be here at this event with ET Now, which I think incidentally is the second event of ET Now that I am participating. The earlier one I had participated, if I recall correctly, was in December 2019. And much has happened after that. And here we are, and where ET Now completes its 15 years. So let me at the outset congratulate the entire team of ET Now for their journey over the last 15 years, which has been marked by several high points and extensive coverage of the Indian economy, the global economy, and analytical discussions and other interactions which they have participated. There was also a bit of a good news from the Reserve Bank of India, which was already mentioned by Sri Subramanian. Recently, the last week, the Reserve Bank received the Risk Manager of the Year 2024 award from Central Banking London. And over the years, particularly in the recent years, the steps that we have taken to build up internal risk management skills within RBI, to, the risk management within RBI, it's a true recognition of that, and the citation clearly recognizes that RBI has now reached a certain high point of all the leading international institutions, particularly the financial institutions and central banks. Now, this is my first public interaction after the monetary policy statement, which I made on 7th of this month. That's about 10 days from now. And so therefore the silent period is over. And I would like to take off from where we left in the monetary policy and try and provide a little bit of further elaboration on the rationale behind the various decisions that we have taken in this latest monetary policy of June. Much was said about the economic growth of India, the GDP growth of India. As you are all aware, last year, 23-24, when we started, the RBI's projection was 6.5% GDP growth for 23-24. The markets and the analysts were pitching a little bit lower, and we were considered as being on the optimistic side. But we continued our journey of optimism because there was enough basis to it, and then we increased it to 7%. The market also revised upwards. The analysts also recognized the trends which were building up, and soon, others also revised their GDP projections upwards. And when we said 7%, it was also perceived as optimistic. Then I think somewhere during the course of the year, earlier, perhaps in January or February, I remember having said in a public forum that we will not be surprised if the GDP growth touches 8%. And indeed, it not only touched 8%, but has exceeded 8%. 8.2 is what has come out. If you look at the average of the last 3 years, the average is 8.3%. The average annual GDP growth over the last 3 years is 8.3%. For the current year also, that is 24-25, we have given a projection of 7.2%, and the earlier projection was 7%. Now, I don't want to get into too much of statistics because, statistics has its own, two sides to statistics. But let me say why we increased the growth. Why did we increase by 20 basis points? Now, that is because, number one, we see the growth momentum. We see a very strong momentum of economic activities, a strong momentum of growth. If you look at the last quarter, that is Q4 of 23-24, that is January to March this year, the momentum of economic activity is much stronger. In fact, it was perhaps the strongest momentum of the last year. And the growth in the last quarter itself was 7.6%. Although the implicit number behind NSO's number was 5.9%, but the momentum was so strong that it came at 7.6%, resulting in the high growth of last year. And that same strong momentum of economic activity has also continued into the first quarter of this year. April and May are over. We have in Reserve Bank, we have the data for it. June also, we are in the third week of June now. The data is also available with us. So we see the momentum is well sustained. And we are therefore quite sanguine and quite optimistic that the projection which we have given for the first quarter of this year, 7.3%, we are quite optimistic that it will indeed be 7.3%. And there is no reason why the momentum will slow down. That's the first point. So the momentum of economic activity continues to be strong. The second point, there are several other points, I will not go into the details, but the second point I would like to highlight is that rural demand, in the consumption side, rural demand which was lagging behind for considerable period of time since the COVID, and perhaps in the first half of last year also, has also beginning to improve and improve quite visibly. The rural demand, rural consumption has picked up, it has gone up. FMCG sales in the rural sector has also increased. The demand for NREGA labor has also gone down. The agricultural season also looks very optimistic because of the projections of above normal monsoon, southwest monsoon this year. So therefore, rural demand is something which is picking up, which was not there earlier. And all our analysis, all the trends which have come to us, it indicate that the rural demand will hold. And as the government capex starts unfolding, as the expenditure from the government side as well as from the private investment, they start picking up, I think rural demand this year will be well sustained. The third point is that the external sector, notwithstanding that the global growth is still below its historical average. In fact, from 2000 to 2019, the average annual global growth, the trend growth, GDP growth was about 3.8%. But the IMF has projected 3.2% for current year as well as 3.2% for next year. Now, notwithstanding the fact that the global growth is below the historical trend, but still 3.2% means that the external sector, the external demand will also continue to be strong. And that would mean that it will give a lot of support to our exports, especially the services exports. In fact, services exports of India are doing very well, especially, IT services and other services. It's no more confined to just IT, but it's now business services, it is accountancy, it is legal, it is so many other activities in the realm of services where India is, where things are looking up so far as the external demand is concerned for Indian services sector. So therefore, it's the momentum of economic activity, number one. Number 2, rural demand is picking up. Number 3, the external sector also offers a lot of promise for the Indian economy. Add to that the fact that the urban demand is also holding on, mainly supported by increased activity in the services sector. Add to that the good monsoon which is expected. Add to that the revival of investment which is also happening. Private investment. When I'm saying private investment, I'm specifically referring, when I'm saying investment, I'm specifically referring to private investment. Government capex has been very strong in the last 2 to 3 years. But private investment is now picking up. If you look at the corporate results which have come out for the last year, you will find that the size and the numbers relating to fixed assets have gone up. Earlier, corporates, because of their deleveraged balance sheets, the corporates were holding a lot of cash, a lot of surplus cash they were holding. But now it has moved into fixed assets. So if you look at the balance sheets of corporates, the size of the fixed assets have also grown. And they have shown very good growth. Now that is one evidence that investment, private investment is taking place. You will hear several bankers subsequently during today. They will highlight perhaps even better the demand that the banks are experiencing from the corporate sector. And there is clear visibility of investment happening in certain key sectors of the economy, mainly related to infrastructure activities, whether it is steel or cement and other areas like electronics, chemicals and fertilizers, pharmaceuticals, oil and gas. So all these sectors, basically primarily infrastructure sectors and also electronics and certain capital goods. Capital goods imports have also, electronic goods and capital good imports are also looking up, which means that that is going into more of productive activity. So because taking all these things into account, we have therefore increased our growth rate to 7.2%. Now turning to inflation, inflation is moderating, but at a very slow pace. We are fairly confident that the downward journey of inflation will continue. We are pretty optimistic that the inflation will continue to moderate, but the pace of moderation seems to be very, very slow. And it is so worldwide. If you look at the numbers, even in advanced economies, the pace of disinflation is very slow. In the advanced economies also, we are coming across instances where inflation has again mildly gone up, and or rather it has kept higher than what was estimated. So therefore, this last mile of the disinflation journey is proving to be very sticky, arduous, and very slow. That requires a lot of patience, and we need to be watchful. But we are quite confident about inflation moderating to 4%. How long it will take? We have given out a path in our monetary policy statement and also in the monetary policy report, which we come out every 6 months. So for the time being, we are sticking to that because there are lots of uncertainties also. And the uncertainties come from the fact that the challenges of food inflation still remain. Food inflation continues to be high. In fact, in the last 6 to 7 months, the average food inflation is about 8%. Core inflation has substantially moderated and has reached a historical low of 3%. That was the number for May. In May, the core inflation was 3%, whereas food inflation was 7.9%. So the disinflation process is getting a lot of resistance from the food inflation remaining stubborn and remaining very high. And that's primarily because of supply side factors which are affected by the weather conditions. The extreme heat last summer has affected the pulses cultivation. It has affected the vegetable production. So therefore, there are challenges in the journey for disinflation, and we need to be very mindful of that. International metal prices have also started going up, of late. So taking into all these factors, we have given our projection that current year's average inflation will be 4.5%, inflation will continue, these are our projections. Inflation will continue to moderate, but will continue at a slow pace. So therefore, at the current juncture, we thought it's most appropriate to avoid any kind of adventurism and stick to the path of inflation that we had earlier laid out. And as a central bank, we will remain very watchful and determine our actions as we go forward. Having said that, let me say that the growth inflation dynamics in India is very well placed. There is enough room, considering the fact that inflation is moderating, there is enough room for us to sort of focus clearly on inflation. There is also enough room for economic growth to pick up. Whatever moderation in inflation we have achieved, thanks to the 250 basis points rate cut and thanks to the actively disinflationary stance that we have taken since the beginning of 2022-23, that is since April 2022, immediately after the commencement of the war in Ukraine, and the monetary tightening that we did, which was mostly done upfront, which was front-loaded. Because of that, the core inflation has come down, and we have been able to achieve that without sacrifice in growth. So therefore, I am very sort of happy to share with you that the balance we are expected to maintain between inflation and growth, which is enshrined into the relevant provision in the Reserve Bank of India Act, when it talks about monetary policy framework, we have adhered to that balance, which is the expectation of the lawmakers as embodied in the Reserve Bank of India Act. Finally, before I conclude, let me say that not only the domestic sector, the external sector, I mentioned about export demand and other potential, but in the external sector, two important things are happening. Number one, our current account deficit has remained very low. In fact, compared to very high numbers in the past years, let me not go into the details of the numbers, but in the first 3 quarters of 23-24, that means from April 23 to December 23, the current account deficit was 1.2%. Our teams are working on the fourth quarter numbers. The fourth quarter numbers look to be even lower. And when you look at the annual current account deficit number, I will not be surprised next week when we publish the current account deficit numbers for this year. It could be even lower than 1%. So the current account deficit looks very promising, and the reserves have reached, you would have seen the latest number, the reserves have reached $655.8 billion US dollars. The forex reserves have reached $655.8 billion. So that sort of gives a lot of confidence to international investors about the stability of Indian markets. And we will continue to build up reserves opportunistically whenever there is an opportunity. I have said it earlier also, it's a matter of stated policy. We don't shy away from that. We will continue to build up our reserves opportunistically whenever there is an opportunity, whenever the market allows it, so that a strong reserves also does help us to maintain the volatility in the markets and also give that confidence to international investors that India will be able to fulfill its external payment obligations. Finally, let me conclude by saying that as a central bank, you are aware the Reserve Bank has got a wide range of functions. It's what they call a full-service central bank. Few central banks in the world have that kind of range of activities, starting from payment systems to financial inclusion, to monetary policy, to regulation of banking, supervision of banking and non-banking sector. So a whole range of activities we have, and our primary responsibility is to ensure financial stability. And as an institution, Reserve Bank remains committed to maintain financial stability in the country and remain future ready for the growing economy that India is and which India promises to be also in the future. We have spelled out some action plan as a part of the agenda for RBI at 100, and which was released along with the monetary policy statement on 7th of June. So with this, let me conclude, and thank you very much for your patient hearing. Thank you.